This is 2, ne? So always make sure that expect the market to, and then let me take this. Let me try to take this just like this, ne? So this is how the model looks like. This is what price might, this what price is always doing, ne? This is 3. This is stage 3. I will show you what's happening here. Like, this is a weekly profile. This is what happened on a weekly profile, ne? Just know that, okay, on Tuesday, let's say on Monday the market is going to accumulate, ne? Then on Tuesday, this is, you look for a fair value gap or a sell stop, ne? On this 4 hour time frame, chasing this daily time frame high or 4 hour time frame high. So how do you project your analysis? You always know that on Monday the market can just open and just buy, ne? And then if it does that, if you see that on Monday the market opened, ne? It bought, it gave a buy order, ne? Or a buy signal, ne? Then the market, that means it has to reach here to stage 1. Once the market reaches to stage 1, just know that the market is no longer going to come back down here. Why is the market going to come back down here? It's not possible. Why is it not possible? Because the market is going to target this high. It's not going to target the high because this is the buy. If it's the sell, that means you just have to turn it around, ne? If it's a sell, that means you just have to turn it around. But now, here it's reaccumulation, here it's redistribution. Like, the problem is just that I cannot write. If I write everything here, you are just going to get confused. But I just want you to understand this circle before, so that you must know how you project your daily bias, how you have to know which high must the market took out, because sometimes a lot of traders are getting wrong because they don't know which days should we expect, how does the market expand, how high does it go, why does it go. You understand, right? So once the market, let's say it will accumulate, ne? If it accumulates, the market is going to, it's going to buy on Tuesday. Then it buys on Wednesday. Like, you don't count the Monday. The Monday is not our trading day. Monday is not our trading. It's not our trading day unless it's a full FOMC day, or it is PMI day, or it is CPI. That's when you only trade Mondays. But if it's not that, if you are not expecting a high volatile move, don't trade. Let's say if you are not a, if you are not expecting, let's say, a high volatile news, don't trade Monday. Monday will only give you a bigger movement if you are going to be having a high impact news. So this is how this cycle moves. Ne? The market will come on Monday. This is Monday. The market will move from here. Then it comes here to this side. Like we are using a one hour time frame, right? Targeting what? Targeting a 4 hour or daily time frame. That means if it is Tuesday and you find that the market is already here, on Monday the market both ne? It on Monday the market gave a buy signal and you find that we are now here at one at stage one. Just know that we expect the market to move higher to come here. So how do we enter here? You can enter because you will look for sell side. You enter on sell side. What a sell side? It's going to be the lowest low before. It might be the London low or it can be the New York low. So after the market moves from here, it will come here. After the market come here, then don't expect the market to come here to trade. It's wrong. If the market is not going to come here, it will move from here and take out this high. What will the market do after taking the high out? That must be a question. Like it must be a question that, like, do I hold my trades after the daily high is taken out of the 4 hour is taken out? You will have to ask yourself that. Now you find that you are not taking your orders going up. Maybe you can put some sell stop, you can put some selling orders here up until the market takes you down again. This is not going to be taking you higher. It will only take you higher if the market want to break another. If the market, let's say, moved from here ne, and it doesn't break this high and it just had to turn around somewhere here. Ne, it didn't reach the high, but it turned here. Just know that the market will have to come here and go up. If it reaches here, if it reaches the high, the daily high, just know that the market is likely to take a market shift structure. Then if it takes a market shift structure, what does it do? It comes back down here in the middle. After coming to create a low in the middle, what will be happening? There will be a previous day high here, ne? And a previous day low here. So what do you participate on? Look which side the market is. You have to measure the market. You will have to measure if the market is going to take out this 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 high, or this high is going to just remain for the whole month. Sometimes it can happen and you find that after this movement the market had to come down here and go back to premium, and it takes on the fair value gap and went down. So that's how you know the market. So you must know the stages. How many stages are you expecting? So let me try to remove this, because unless if you don't understand, but here there are redistribution, the accumulations, like there are a lot of things. Just that, like, I don't want to confuse you, but I just want you to understand that the market will only move three stages if it's only taking out that high, if it's only take, let's say if it comes here, man, it won't just go down from here. It will create a new high if it's still continuing going high. But if it's not continuing going high, it will just come here and turn. And if it turns, it will have to turn up until it get down here. Then when it get down, it will have to move to premium PDRA again. So after moving to premium PDRA, that means it will have to go down because it's on premium. It's not, the market is not on discount. Like any questions, you just have to be asking questions, because if you don't ask questions, that means I will no longer know what you want to what you want to know. Tell me what you want to know. Ask questions. Ask questions what you want to know. Ask questions. Ask questions. Ask questions what you want to know. Guys, are you not asking questions because you didn't even hear what I just said? There are two stages. Always look for, like, that's when, let me tell you what happens after that. Let's say here it's going to be Tuesday. Né? Here it's going to be Wednesday. Wednesday is going to push the market higher. After the Wednesday pushed the market higher, what's going to happen after the Wednesday pushed the market higher? The market, it has to reverse on Thursday. Remember that every Thursday expect a reversal. Sometimes it can be a continuation, but mostly expect a reversal on Wednesday. So I'm going to show you this theory that I'm showing you here. I'm going to show you why am I telling you that the market moves in three stages in a weekly profile. Ne? Okay, let's go. Which date must we go to? Comment any date, because I want you to be 100% sure of what I'm telling you. Ne? You can see it now. Here it's on Thursday. Next, you see here it's on Thursday. You see the time, the Thursday time. Look at here, what happened there. The market from the, like, on a reversal, on where I told you that the market is going to reverse. That's where the market has to reverse. Where did the market reverse? On 2, -2. -2 is standard deviation for. Why is it standard deviation for? Because there are 4 blocks: 1, 2, 3, 4. Standard deviation for. The problem is just that here on trading view we just have to trade it like this. But remember, trading view didn't create the market, and trading view is not creating the market. The market doesn't belong to TradingView. TradingView is just a company that they are doing whatever they are doing. But the market here, the reason why the market sold is because there was a gap here. As you can see here, there was a gap here. On a 4-hour time frame, it's more clear. So let me show you why I told you that the market will buy on Tuesday and reverse on Wednesday. Let us go to a let us go to a 1 hour time frame. The reason why I told you that is that this is 1 hour time frame. Let us see what I told you about. Ne? Let me remove the reversal. Look, should I remove it, or let me just take it to 15 minutes? You will be able to see it. Okay, as you can see, this was Monday. Was okay. This is this is what Monday's price action did. Ne? It's accumulated. This is accumulation. Ne? A. This is accumulation. Ne? Then what did the market did after accumulation? It had to manipulate. This is a consolidation, but then let me show you what happened. So on Tuesday, you can see, ne, this is where is that 6 o'clock price time. So I told you to buy below 6 o'clock time. Ne? When the market came from this 6 o'clock time, do you see that it went down? What did the market do when it went down? It went for the sell side. Where is the sell side? Remember the time I was telling you about the sell side. Remember these things that I showed you here. Ne? Guys, I don't know how am I going to show you this, but let me show you. Here is the accumulation that I showed you. Ne? Here it's here it's here it's Tuesday. Ne? The market went to it's either fair value gap or sell stops. Ne? Let me show you what happened last week. So the market is about to open now. So do you see? This is 6 o'clock price. Do you see it's 6 o'clock price here? We buy below 6. That means where do we buy below? We buy the sell stops. Where are the sell stops? Show me the sell stops. Why are these? The sell stops are going to be created here on London session. Between London session, this is where the sell stop was created. This is where the sell stop was created. This is the low of the London, right? Why is it the low of the London? Because it's between 2 to 5. Do you see that on Tuesday the market went for, do you see this is Tuesday? Look at the price here. Look at the time. Do you see? Look at the time. Exactly at opening time. Do you see what happened? Exactly at opening time, the market came and took the sell stops on Tuesday. Now, was this coincidence? So, what happened when the market took out the low? This is what happened. This is the sell side, as you can see. This is the sell side, as you can see. Now, this is the sell side that was taken out on Tuesday. Once the market take out this sell side, what did the market did? It had, before it took out this sell side, it showed it gave the high. It indicated that it was going high because